please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's look at the way the markets have opened. That's a nice shade of green.
The market is weak. We're down about 34 points on the Nifty, about 60-odd points on the Sensex.
The market, it looks like we're pretty much near the lows again.
Again, some attempt to recover from the lows on stocks like Dabur, Exide, LIC, Housing Finance, but then these are just small interventions here and there. The mid-cap market still has a bigger problem.
If it turns. In terms of individual stocks, of course, today was a day where you're not looking at individual stocks per se. It's just across the board selling is what you had. In terms of big move on the index, of course, it came from stocks like SBI, HUL, IndusInd Bank, Tata Motors, these kind of names.
Dalal Street extends losses in the last hour of trade. Sensex slips below 38,200. Nifty breaches 11,500 in intraday trade. Combined weight of crude and rupee weighs.
The rupee hits a fresh record low despite RBI's intervention, falls below 71.50 for the first time ever, but other emerging market currencies fall even further.
Crude oil prices surge after the evacuation of Gulf of Mexico oil platforms in preparation for a hurricane. Petrol and diesel prices rise for the 10th straight day.
Mid-cap stocks get battered due to selling across the board. The index tumbles nearly 3%. 4 stocks decline for every advancing stock.
Banks and financial stocks get pummeled in trade. Higher bond yields spoil spot. Bank Nifty ends over 1% in the red, led by public sector banks. Well, those were the top 5 headlines from a day that saw a lot of bleeding on Dalal Street. Hello and welcome to Markets Today Talk Back, the show where we tell you all that happened in 6, I can say today, harrowing hours of trading. We'll tell you all that in just 5 headlines. I'm Lata Venkatesh, with me, my colleague Prashant Nair. Hi, Prashant.
Hi. The market, the rupee, everything looking pretty
bleak. Not if you're a bear.
Not if you're a bear, that is. I mean, so somebody got some follow through, right? I mean, if you were bearish yesterday, they got follow through. Over the next 30 minutes, we're going to talk about all of that, what the market did, why it did what it did. Our guests will answer your questions. So we have Sanjeev Vasin of IIFL and technical expert Mitesh Thakkar. Gentlemen, both of you, thanks very much for being with us here on the show. But before we start the Q&A, as always, let's spend a couple of minutes talking about what really happened, what went on. Lata.
Well, in the first place, we must take this fear out of the mind that we are falling alone. We may be following more on some days on equities, but it's really part of a global fall. And today, yes, we stood out in terms of our equity fall. And that's because we are more vulnerable to crude, perhaps, than most other countries, being the second largest importer of crude. EM currencies, if you looked at the other EM currencies, everybody was under pressure. Whether you looked at won or ringgit or Filipino peso, and much worse when you look at rand and lira and even rupiah. Falling much more than we did. So, it was not as if we were singled out for punishment. In fact, actually, we are falling in line with the Korean won, which, again, is not one of those extremely pummeled economies at all. So the rupee is the one that I'm referring to, that the slipping in trade was in line with emerging market peers. What made us look worse only is because bond yields rose because of crude prices, and that gave the financial stocks a real, genuine scare. It becomes a scare for growth as well. But many economists, and we are going to play out their bites for you, will argue that that's exactly what the doctor ordered. If you have a current account deficit which indicates you're consuming more imports than exports, then your growth has to slow. That is the only way to cure the problem. So we shouldn't imagine this as a crisis. This is part of the solution to some extent. But stock-wise, it will not look like that.
No, but it's pretty easy, the job for me, because a lot of red, so can run through, not all, but a few, just to kind of indicate the kind of damage we saw. So, so Tata Power, Ambuja, Bank of Baroda, Grasim, Ultratech, Asian Paints, SBI. I'm just limiting myself to large caps right now. And we did highlight how, although the Nifty was down just 0.5%, the mid-cap and small-cap indices were down 2 3/4% each. So the cut there was far larger. So keep that in mind. IT stocks were higher. Pharma wasn't. I mean, maybe pharma's already run up quite a bit. It has actually. So IT did well. Infosys, HCL Tech, Tech Mahindra, TCS, Wipro, actually pretty much all of the gainers in that space, the gainers in Nifty were all IT stocks. And not small. I mean, 2% on large stocks like TCS. I mean, not a small thing. Well, you know, large losses, IRB. You know, stock something like an NCC. So construction, leverage names, we know the high beta, you know, some of the well-owned names, Sun TV, Havells, PSU Banks, Union Bank, I think there was Canada Bank there, BEML, India Cements, Jet Airways, you know, Jubilant Food, again, institutions love that name, done 5%, Tata Global, Delta Corp, so long list of names in the broader space which actually face the brunt.
Okay, well, let's straight away to our guests to find out what from here on. First to you, Mitesh, what are the charts saying? Still headed lower, piercing supports?
Evening, Lata. I think, you know, morning I was talking about the fact that we could test 27,400 on the Bank Nifty and about 11,500 on the Nifty. Both the levels were tested. Both were not being broken in the sense that we kind of closed marginally off those levels. Now, these are important levels. A couple of moving averages converge here for the Bank Nifty, while on the Nifty, this has been a historical gap level. So the structure is definitely weak. So in case you start breaking below that, I would pencil in some more downside, and not a big downside, but some more profit booking led correction, which is, you know, a stronger pullback than what we have seen in the last few weeks. So in case we trade below 11,485, then the Nifty could test 11,400 levels, while the Bank Nifty, if it breaks 27,400, it could possibly decline to about 27,100 to about 150 zones.
Lata, you know, at 11 o'clock, I had put out a small piece saying I on the Nifty. Essentially, you know, the point is that the Nifty, with yesterday's big cut, sort of broke through the base of a channel which began sometime in late June, actually 27th of June. I mean, the channel begins at 10,557, and as of yesterday, it broke through that cut. And I had put out that the next immediate support is 11,495. I don't know. I don't think we have the graphics which we can pull up right now. 11,495 was the support that I put out. The low today was 11,496.85. So, I mean, within 1 or 2 points of here and there. But that is, I mean, you know, these things do kind of sort of tell you the very near term, if you're trading, these things do take prominence. There is, of course, all of the macro stuff which we're going to discuss, and that's essentially the second story, the second headline of the day today. The rupee hit a fresh record low in late trade today. High oil prices, you know, hit the rupee despite RBI's intervention, which came in earlier in the day. This drop, although, is lesser as compared to what we saw as far as sell-off is concerned in many other emerging market currencies. IT stocks, as I said earlier, rose in response. I mean, so is anybody sort of panicking, or no panic, or nothing at all? I mean,
no, I won't say panic, but there's worry as to when will this end. There'll be a little more panic for perhaps emerging market debt funds or India debt funds, who will see their gains being shaved off rather quickly. They work on wafer-thin margins. It's not hand-wringing crisis, but just a worry as to, you know, how much further. And that's what is casting its shadows on the stock market as well. The one way to look at it is, you know, today, how much did the dollar rise? The dollar index rose 0.4 and the rupee fell 0.4. So in a way, we are just keeping in step with the global arithmetic of ebb and flow. Also, a lot of dealers are now telling me that exporters are asking if they should hedge 6 months forward. What does an exporter mean when he sees hedge 6 months forward? Normally, he was hedging 2-3 months forward. What he's saying is, this is a damn good level, yaar. You know, why don't I sell a little more? Why don't I sell not just for the next 2 months or 3 months, let me sell for 6 months? Likewise, importers are coming and asking dealers, really, should I hedge at this level? I mean, the forward value of the rupee looks like 79 to me. I'm not going to buy a forward. So as the demand ebbs for, you know, buying imports forward, and as the supply of forward dollars increases from exporters, I think the equilibrium will be reached. People are already telling me that they are hearing this kind of conversation, questions from both exporters and importers. So my sense is that balance should be reached, and at a time where the RBI senses that, you know, the global equilibrium also is kind of the dollar won't strengthen anymore. It will come. It's got $425 billion. It will come in all its ferocity. Now it is waiting for, I think, the global currency markets to find their own equilibrium first. So I wouldn't worry, or rather panic, but yes, some concern.
Don't waste dollars. Save the dollars when they, big bang for the buck, essentially.
Exactly.
I mean, you want that. We spoke with H. Neem Kumar from IIFL and JP Morgan's Jahangir Aziz on the rupee outlook. Listen in to what they had to say.
With this extent of rupee depreciation, exports growth should see an acceleration. So this is a natural mechanism for rebalancing the current account, and therefore I think at some stage you would actually see exports growth also pick up. But at this point in time, if FY19 current account deficit will be very close to the peak that we had in FY13-14. Again, forecasting rupee is as hard as forecasting oil prices as well. But my guess is that a large part of the depreciation or readjustment that need to happen has already happened.
I mean, that is the sense I got from many people, that the bulk of the adjustment for not having fallen for the last 4 years has already happened, perhaps in the last 2 or 3 weeks. We have some questions coming your way, and inevitably they are about IT stocks. Avinash Patra has tweeted to us with a question on Infosys. He wants a 6-month view on the IT giant. Well, okay, Sanjeev, it's a 6-month view, but really, what is the near-term view on Infosys?
So, Lata, I think the IT has been the best place to hide in a fall where the rupee is just going through all barriers. And today TCS has also hit 8 lakh crores of market cap quietly. So I think Infosys on a valuation may be fully stretched. We think the numbers may disappoint in a way because of the trajectory which they have been saying. So I think 6 months from here, Infosys may not be such a big performer. We would rather be more bullish on pharma stocks, and that is where we think the proxy to the rupee should be played. So Infosys could be in this band of 700 to 800 at least for the next 6 months.
Okay. Very quickly, Mitesh, 6-month rupee, 6-month Infosys?
Lata, only for today, it's difficult for me to give you a call technically for the sake that the chart needs to be adjusted by the evening. We've had a bonus today.
Oh.
So unfortunately, the chart is
fair enough. Fair point.
Okay, we move on to the third story of the day. Oil prices rallied sharply today after 2 oil rigs were evacuated in the Gulf of Mexico in preparation for a hurricane. Brent crude oil shot past the $79 a barrel mark, while WTI NYMEX is up around 2%. Oil sensitives like paint companies, oil refining companies dropped in trade. Manisha Gupta is here with a quick take on what's really going on and how long this extended move in oil on the higher side may continue. Manisha.
Well, thank you so much for that. Well, yeah, we have seen crude prices, Brent, that is inches away from that $80 per barrel mark, and that clearly has taken the Indian retail prices to all-time highs. We have seen diesel and petrol continue to gain up to all-time highs for a 10th straight day today. Of course, the cues are coming in from the global crude oil markets as well, where the prices have gained 10% in last 2 weeks itself. The latest trigger, as you mentioned, has been about the Gulf of Mexico. A couple of platforms have been evacuated ahead of the Hurricane Gordon landfall today. And remember, 16% of US fuel comes out of Gulf of Mexico. So that is where the potential concerns are from. The Iran sanctions is something that has been adding premium to prices as well. We already have seen 1 to 1.5 million barrels go offline from Iran as the loading and exports have declined. But India clearly sticking to its guns as the government has told the state refiners to continue to import from Iran if Tehran is able to manage and ensure the cargoes therein. So it is really India's tall stand, as we have seen, against Washington directives. It is the second straight country to do that post-China. So 2 major Asian countries taking a stand there. But at this point in time, the kind of gains that we have seen in crude, most bankers, international experts will tell you that further gains from here on is not ruled out. A level above 80 also is something that they're watching out for.
Ooh, okay. That's a warning. But here's someone who wants to translate it into a stock buy-sell. Nandan Ghosh has written to us from Kolkata. Here's a question on SpiceJet. He says he has been holding 300 shares at 77 rupees a piece for the company for the last 15 months. He says wants to know if he should hold or sell. 300 shares at 77 rupees, SpiceJet. Sanjeev.
So Lata, I think SpiceJet and the other airline stocks are in the worst of the space because of high crude prices and a weak rupee. However, if you hear their language, the volume of business is at an all-time high. The union, the aviation minister is indicating that at least 12 to 14 more airports are on, new airports are on the way, and air traffic is going to go through the roof. So the management sounded that the yields may rise in the coming few quarters, but I think he should hold on because it's a very good proxy to the best consumption space. However, the underlying caveat on the negative side is the weak rupee and the rise in crude prices. We think all that is evenly played out. At 77, he has a good chance of making money over the next 6 to 9 months.
Okay, we take a very quick break here. Stay with us. We are back. We've got more stories to tell and, of course, questions to take. Sanjeev and Mitesh, stay with us. We are back in a jiffy. Welcome back. You're with us here on Markets Today Talk Back. The market down 0.5% after yesterday's sell-off, so the bearish phase continuing. Only been 2 days though. The fourth headline, which essentially has to be midcaps, which ended the day with sharp cuts. The Nifty MidCap index was down nearly 3%, and this was led by the likes of India Cements, NBCC, Jubilant FoodWorks, which were all down over 5%. Of course, I mean, advance decline was pretty negative. Declines were almost 4 times the number of advances. I think we've got a question on NBCC. Is it S. Mukherjee from Kolkata is written in with a question on NBCC. He wants to know the right time to invest 10,000 rupees into NBCC stock. Is this the right time? Sanjeev, why don't you answer Mr. Mukherjee?
Yeah, so NBCC has been in the eye of the storm over the tree cutting and some of the NGT stay order. But given the order book which they have, given the ascent on tier 1, tier 2 cities, not on redeveloping but on new land acquisitions, I think it's a very good proxy plate for construction pan-India. The valuations are very reasonable. Government of India is going to come out with an OFS, which can be, I think, any time now in the next 1 month. And you will get a proverbial discount because of the OFS. So wait for that OFS or buy some now and buy some more in the OFS. We have a target of 130 in the next 1 year, and we think this is a very good time to buy this stock.
Okay. Technically speaking, Mitesh?
Lata, I think the stock has nearly halved from its highs, and now I think it's now trying to show signs of indicators at least bottoming out, which means that the price might do that soon. So I would be quite hopeful around these levels. I think there's long-term support around levels of 60 to about 55. So you're not very far away from those levels. I think good time to start accumulating, so you can invest 50% now, and then if it falls 5-7 rupees more, add to his long positions.
Okay. Well, I guess that'll satisfy Mr. Mukherjee. Let's get to the last headline of the day. Banks and financial stocks were pummeled in trade. This is bond yields touched the 8% mark, in fact went up to 8.04% on account of both the slipping rupee and rising crude prices. Nifty Bank ended the day almost 1.5% in the red, led by public sector banks. That index was down over 3.5%. Let's now listen to JP Morgan's Jahangir Aziz on what he makes of bond yields, and then we are coming back.
There is a rate hike in the October policy, right?
My guess is that yes. I mean, it's high time.
Okay.
And it's not just, as I said, I mean, it's just not India. Almost all current account deficit economies among emerging markets are now quite a bit away from where they should be on the rate cycle.
Okay, that's Jahangir Aziz expecting a rate hike from the Reserve Bank of India. Our viewer Satya Kadarla has 1,500 shares of State Bank of India. He's been holding it for the last 2 months. His cost is 307 rupees a share. He's a short-term investor, wants to know whether he should hold or sell. That is SBI, his cost is 307, stocks at about 296. Mitesh, what would you tell him?
So I think SBI, on multiple occasions, Prashant has failed to get past the 325 mark and close sustainably above that. So 325, 330 on the medium to longer term charts is a very strong supply zone. If the outlook is short term, then I think not the best levels to hold the stock from at 307. So he's a very marginal loss, can exit now. But I think if it gets back to 260, 250 odd zone, my sense is it's doing a 240, 330 kind of a range. So try to buy it closer to that lower end of the range.
Okay. Well, we've got more bank questions. Federal Bank is what Vivek Sharma is worried about. He has been holding 30 shares of Federal Bank, and he's purchased them at 85 rupees a piece. Holding it for a month, wants to know if he should continue to hold it or sell. 30 shares of Federal Bank at 85 rupees. Sanjeev?
So Federal Bank is again been in the eye of the storm because of the Kerala flood, and it has maximum exposure there. The extent of the damage is not known yet fully, but I think definitely it will hurt a lot of the receivables. NPA levels could rise. The stock has been under pressure, but I think if you have a slightly longer term views, we know that Kerala has been also a state where a large part of the inflows come from the Middle East. And once you see rupee at these levels, I would expect more inflows to be there from a large part of the population working abroad. So I would tell him actually wait for a bottoming out around this 73, 74. He could average out more and wait for another 6 to 9 months where he could see reasonable gains of maybe 95 to 100 in the next 6 to 9 months.
Okay, Mitesh, you want a jab at this?
To me, I think, the stock, at least in the short term, looks slightly weak, but it's very close to its important support zones as well. So I think around 66 to about 69 should be a good support area. And I think the stock at these levels, if you can add more around 70, I think I would be even happy and suggest, him to do that with the stop below 65. And I think I agree with Sanjeev on the upside, 1995 could be a good reasonable target for the next few months.
Okay. Gentlemen, we are out of time. Thank you very much for answering the questions of our viewers and giving us stock advice. We have to wrap up this edition of Markets Today. On that note, let's leave you with some expert advice we got.
So I think despite this challenge which is on the currency as well as oil front, India is still very attractive. There's a lot of interest among foreign investors. On the positive side, we have seen that in the first quarter, India's economic growth rate, GDP has bounced above 8%, and India is one of the fastest growing countries in the larger economies.
Markets really had a great move after this quarter. So I think the some of the good news in the stock, but we would be buyers of selective sectors, right? We've liked for a while, things like infrastructure. That spending is going to continue. We like some of the sectors we've liked for a while, like cement. We also like things that have not moved much, like the hotel industry, which is seeing strong fundamental growth. So more on the mid-cap side. We like some of the banks that have lagged. The ICICIs and the Axis banks have come back to life, and that's interesting to us. We are getting more and more intrigued by the real estate sector.